Hello and welcome to Franchising Uncut, a spin off of Tell Us Your Effin' Story podcast. Franchising Uncut is a series of interviews with leaders in the franchise and retail sectors. I'm your host, David Lindsay, and guest Bruce McFarland, CEO of BDC Partners, a franchise advisory and investment business. Today, we're doing deep dive into how franchisors are growing their business by bringing in capital and expertise. Before we chat about investment trends, let's get into your business, Bruce. Okay, so BDC started in 2009 started by Von McGuinness and John Sully as a property and retail advisory business. What is it that you do now?
Thanks, Dave. Good to be with you. So BDC, we do a few different things, all in franchising and retail, but we've got a law firm that we do, so assisting franchisors and retailers from a risk point of view. We franchise recruitment,
Uh,
we do franchise. We still do the property side, so we work mostly with retailers and franchisors, and then we've got BDC Performance, where we look at assisting franchisors with people recruitment,
mm,
for the executive franchise advisory councils, mentor groups for franchise executives as well.
that's fantastic. So, l- for the topic of today around investments, we started up BDC Investments. First of all, why did it start, and what are the current investments that you have?
So I guess the why. So a group of people, the two of us and others that were involved, and saw that there's a lot of franchise systems that really struggle to get past that critical mass,
Yeah,
like where they're essentially break even because of franchise royalties. So there's just so many emerging franchisors that get to 10, 12, 15, even 20, but they're reliant on either company owned stores, or they're reliant on if upfront fees for their franchise. And so, what are the big challenges they've got is, they either don't have enough money, or they
yeah,
don't have the right people to
yeah.
guide them. And so we felt that between our group of people, we could raise some money. We did have some capital behind us, and we also had people
Yeah.
that we could help support. So some of the professional services businesses we had would be able to support emerging franchisors to grow them. And so that was the plan. Over the last 5 years, that plan has evolved a little bit.
Mm.
It took a while. We had a couple of false starts with
Yep.
investing into businesses and stuff like that. Things, and I think, as a franchisor, which you were, like, people are a little, you did this and got involved with, you had investors, but a
Yep.
lot of franchisors are scared about that, or they
Correct.
want to control 100%, and they think that I need to keep doing that, and we'll get, chat further about other things. But and then in terms of current investors, current investment, sorry. So we've got four businesses that we've got an equity stake in. So House of Golf, John's been involved with House of Golf for a while as an advisory board member, and so we have some equity in that. So retail. So we then invested in Sinewave. So Sinewave is a
Yep.
master franchise
Yep.
from Fast Signs in the US. Fast Signs have got about 850 franchises. Um,
Impressive.
Sinewave in Australia had 17 franchisees. It's a 13 franchisees, 17 locations. So that's one. And then we looked at Bubba Pizza. Bubba Pizza was a very strong pizza brand with the founder's sons were running the business, and they again needed some support. And the network had declined in numbers since
Mm.
COVID, and Damien and Josh, the owners, wanted some support. And then finally, Computer Explorers. Computer Explorers is a great business in the UK. They have 35,000 kids doing technology
Wow.
classes. It's going really well. It's a franchise model in the UK, and Stuart Harley, the franchisor, came out to Australia, I think mainly because he wanted some warm weather in winter time. So we spent some time with Stuart, and went, rather than be a master franchisee, which wasn't our preferred
Fair.
model,
Yeah.
would be a joint venture partner with
Yeah.
him. And so we ended up with the majority ownership in Australia with Stuart. And excitingly, we are about to launch that business in the US, where we are also in business with Stuart as well. So we've got the four. We ran a competition last year, Emerging
Yeah.
Giants. So we have Freshfront was the winner of the Emerging Giants competition. We're in the process of negotiating with Marty, the founder, and
Yeah.
hopefully we can find a good landing place where we also have a fifth business.
So the industry seems a little agnostic with regards to the focus on investment. Is it purely around franchising or a specific industry that's in there?
Yeah, I think, and probably we haven't got the PE playbook out when
Yeah.
we did this. And, when you look at other, listed or unlisted investors into, they might stick to a sector, and
Yeah.
maybe that's a mistake. But, at the moment, we went back to why are we doing what we're doing, and we want to work with good people. We want to work with emerging businesses that we can support and grow, and that will have people involved that need and want advice and assistance. So it's a relationship based thing, and industries we think can grow. So
Yeah.
obviously, if you stick to one industry, you all got all your eggs in one basket, and things might go wrong. Food's tough, we get it, but obviously John Sully, our partner's got a background in food industry, so we think, but people still eat, so there's
That's
always
it.
going to be someone, and people love pizza. So and then we also thought about the use of technology as well, and what if things are getting disrupted really quickly.
Yeah.
What are industries? Well, get into technology,
Yeah.
computer
Computer
explorers,
explorers.
embrace it, train kids. People still want their kids to be educated, so and make it a bit of fun. So we looked at the sectors, but rather than all of our interests, it was franchising is the common theme.
Yep.
Through it. So
So it's a nice segue. You mentioned about computer explorers going over to the US. You've just recently returned from IFA in Vegas, which I'm sure was a whole lot of fun. What were some of the main trends that caught your attention with franchisors and their ownership journey over there?
yeah. So it's really interesting. I've been to 4 in a row now for the franchise for the IFA, and so there's all of the best franchising people around the world are all in the same spot at
Yeah.
the same time. Most of them in a casino, which is not a great place to hang out.
You
But
don't get to see daylight for hours.
don't
Yeah.
get to see daylight for a week. But so in terms of trends, like one of the things that's happening in the US, it's been continuing, and we had a session with the Franchise Council delegation that was in Vegas this year. So there was 50 Aussies and Kiwis there. Fran Data provided some great learnings, and looking at the markets of the US market, the New Zealand market, and the Australian market. But with the US, platforming is the trend. So what you're talking about, earlier is multi-branded businesses that are growing, and so platforming has been a trend. And how has that developed? So the Fran Data research, there's 272 platforms which have 1,011 brands. So in the US, there's about 4,000 brands, and about a quarter of them are platforms. So that's a trend that's not the case in Australia. I don't know the exact numbers, and I don't think anyone probably has done the research here. But if we've got 1,400 brands, it's not a quarter of them on platforms in Australia. So I think that platform, and then the platforms aren't all private equity owned, but 25% of them in the US are private equity backed.
Wow. 250 or so platforms. That's incredible.
Yeah. So there's a lot of the private equity. So at franchisor level, that's a trend, and that trend is continuing. Private equity are also in franchisee land. So you think of franchising, you think local, you think mum and dad going, being in the local community, and that's still important. And that was still the theme of IFA this year, was franchising means local. However, the other side of it is the Flynn group were there, and so they've got 2,000. Here we go. I'm going to look this one up. 2,900 locations. They do $5 billion in sales,
and they're franchisees.
And they're across 15 different brands. They've got 48,000 employees. So Greg Flynn was inducted into the Hall of Fame, and he's a franchisee. And so that's at the extreme. He's the largest franchisee in the world. But then private equity is seeing it, and not only just in in food and fitness. So Greg, he's in food and fitness, but home services. So they're looking at home services and going, well, there's only so many home services brands we can invest in. Neighbour is the biggest in the
Yeah.
US, because I think the biggest system in the world.
In the world, yeah.
Yeah. So now so the trend is investment into franchisees, businesses, and having multi-unit, multi-branded.
It's interesting to draw the comparison between America and Australia. Like in Australia, you'll find in a lot of franchise agreements non-competes, and you're not allowed to work with other brands and all of this. Where if you actually step back and you've got a multi-unit operator that has that skill set, why wouldn't you encourage them to start building out their portfolio with other brands and leveraging staff across different brands as well?
Yeah, I don't know. It is really interesting, like why that I think both of those trends. So, the trend of private equity is
Yeah,
not here yet.
it's not
It's
here.
it's
Yeah,
here, but it's not here. And we'll talk about
yeah,
Australia, but I think the multi-unit franchisees, lots of home services, particularly, like it's a man in a van. You have one
yeah.
territory, and that's what you do.
Hmm.
So I don't know whether that will continue, like how that flows through to Australia.
Yeah,
The private equity one, the short answer as to why that trend is slower in Australia is
slower. Yeah,
scale. It's
yeah.
all about scale.
Scale.
So,
Yeah,
private equity in Australia um, has been here for a long time. So, I was fortunate to work with Jeff and Janine Ellis when the Riverside set up. So, Riverside Company is a US, probably in the top 3 largest US private equity firms that are in franchising.
yep.
Um, and Enable is the example of one of their big investments. They came to Australia and invested into Boost Juice in the 2009, I think,
Hmm.
something like that. And so, involved in that transaction, Riverside have been here. They actually haven't done another franchise group since they've been here.
Yeah,
Um,
that's
they
interesting.
they did well in Boost, which became Retail Zoo, and then they had multiple brands in that group. But that was an example of a successful private equity transaction that happened a long time ago.
Mm.
But even that private equity firm that's all over franchising globally
Yeah, it
has
didn't
not
go
done it
again.
here, hasn't gone again in Australia.
Mm.
So I think in terms of Australian, there are other groups like, the group, Brian Singer, Brody Arnold, they had the shaver shop. They took that
Mm.
public. They've got Indota Spas. They've got Industry Beans, which is a retail business. So they're another one. River Capital, a couple of
Yes.
years ago,
Yeah.
acquired the Cheesecake
Cheesecake shop.
Shop.
Yep.
That's a family office that's now got other people's money in that as well. So private equity's been around.
Mm.
There's lots of other examples,
But
but
they're not fishing in the franchisee net yet. They're
they're
just
definitely not.
they're looking at the larger groups that have an established network and not getting into the franchisee. I suppose, like jumping on, how do you see the consolidation trend in the US franchise industry? How it's affecting the Australian market?
I think it's still it's starting. Like there's a few different parts to that. So the listed part.
Mm.
So you've got RFG. So
Yeah.
the I think the reason they acquired lots of brands quite a long time ago. Our business partner John's brand as well, and Michelle's Patisserie, and it hasn't gone well in
Mm.
multiple. Like it's up and down, and it's going well in Turkey for Gruyere.
Yeah.
Like it's still got successful parts to it, but it hasn't been a resounding success
Sex.
for the franchisees and for some of those, other than the founders of some of those brands.
Mm.
So there's the listed side,
Yeah.
that's and listed consolidation. The alignment between shareholder returns and franchisee returns
Profit. Yeah.
is a little bit tricky, I think, in the listed space. And even in the US, I don't think it's not as prominent as maybe private equity.
Mm.
I think the private equity consolidation in Australia, again, scale is a big issue.
Yeah.
Like if private equity, if there's not $5 million of EBIT at the franchisor level, it's too small.
Yeah.
So there's not as many brands, and so there's lots. Which is back to why we got into this. There's so many franchise brands that've got less than 25 outlets, and they're not
Yeah.
making $5 million profit. They're
Yeah.
not barely making $1 million profit if they're lucky.
Yeah.
So the number of franchise brands that are available for private equity investment
It's very limited.
on the platform is limited. And so, but where it can work is where there's multiple brands
Hmm.
put it together
And it consolidated.
and consolidate. So I think there's still opportunity for it, and there's definitely people doing it. So it's a Concept Data doing it,
Yeah.
like it's family owned, but they're consolidating. They bought Asai Brothers
Hmm.
last year, and they've got, I don't know, a dozen brands or something in that group. So
Yeah, well,
there are platforms that private equity, Retail Zoos, it's on its third private equity owner. The Ellis family own a small stake still.
yep.
So it is a trend, but I think what probably the other thing you're seeing is that the larger brands, if they want to sell,
Mm, they need to, yeah,
find an overseas buyer.
yeah,
So I think
yeah,
that's how they'll enter the market and then potentially bolt on smaller brands around it.
yeah, yeah, to increase all of the economics. Um, what should franchisors consider when deciding whether to bring in investors into their business?
Yeah, so I think, and I'm open to your experience in
Yeah,
this as well. So, because you obviously did this at Salts of the Earth, but just thinking about it, so the benefits of investment and, there's growth, there's
yeah,
capital to grow your
yeah,
brand, there's strategic support, people that have got different experiences, there's hopefully improve cash flow, so you're not worrying about I need to sell a franchise for my next dollar because then I can do this or and particularly now with innovation, AI, invest, often the investors, particularly if they're sophisticated, are across what's going on in the market, and so they can bring ideas into, and have already been there and done that and tried things or can help you try things. So that sort of flows into resources and expertise. It's
yeah,
people, things like that. And then return on investment. You think if you're more productive, you grow faster, you're going to get a better return on investment.
yeah,
That's the positives.
yeah,
That's why you need to think about all that.
yeah.
Now let's look at the other side of things.
Exactly,
Okay.
because it's not necessarily like if we're struggling getting up to 20 locations, there's obviously a couple of skeletons in the closet by the time you open up the closet door and take a look.
Yeah.
Um,
So
and
we'll go
that's
back to, yeah, that's right. And so that can you can emphasize things that were wrong with the business at the start. I think we'll just whip through, but dilution, you don't own it
yeah,
anymore, so you've
yeah,
diluted, which then leads to lack of control
yeah,
in your decision making and things that you wanted to be able to do. Somewhat you have to account to a board or someone, a chairman or something like that. The transaction costs, like
yeah,
so it's cost private equity or family offices or when they invest they cost money, and that cost they normally put into the business. But the second thing is the ongoing costs of advisory boards and advisors that are, the new lawyers and accountants that they bring in, or whatever it is. Like there's more costs, and the
yeah,
business may not be able to afford the additional costs. But probably the thing that in franchising that I want to, is relationships.
yeah,
Franchising, is a people business. It's about relationships, and so relationships at founder franchisor level, within the head office team change because the private equity investors or the family office
correct.
might bring different people in, or you're focusing on managing stakeholder relationships at the head office level, not necessarily. So that's one thing. But bringing it down to franchisee level, the franchisees, particularly because it's not a common thing in a, they've been bought into a franchise because
The
of a
owner.
relationship with the franchise
Yeah,
or the founder, the people,
yep.
and so that relationship, and they go, well, hang on, they're going to flip us in 3 years or 5 years or
Yeah,
whatever,
we're
and
just a number to them
we're
now.
just a number to them, and so relationships can break
Yeah,
down by not necessarily anything that people do wrong. It's just perception of
it's perception.
what's going to happen, and so you need to continue to invest that. So I think private equity, that's a real thing, and FBR, we work with them in the US and in Australia, and they do franchisee satisfaction surveys, and that's one of the things they work with private equity and do surveys when they're coming in, and they do surveys later, and there's often a decline
Yeah,
in franchisee satisfaction,
yeah,
but they might still be getting a return on investment. So it's not
correct.
necessarily aligned to the unit profitability of your franchisees, but
Yeah, it's making sure that you're transparent or again. I reflect going back on my journey and my when I brought on an investor, and it was the right time to bring on an investor because we needed that capital to I suppose really leapfrog into the market space. Um, and it's being transparent. I'm still decision maker. Yes, I'm reporting to a board. Yes, I've got to bring in another person. Is this person the right person to bring in? but you've got to bring them on the journey that there isn't an imminent exit for the founder, because at the end of the day, they invested into that founder at the start of their decision making process. Wasn't just the business. Yeah, the business is a section of their decision, but it's like, you're our leader. Are you going to take us there? How are you going to get us there? So it's a really, really interesting play. Um, so when looking at franchise businesses, typically what are investors looking at?
Yeah, I think yes. From we're doing due diligence at the moment, and I think there's a few things. One is obviously it's about return on investment, so we need to consider that you know us, the founder, and us as the investors, there will be a good return on investment
Yeah.
out of this. So being clear on what the exit strategy is, what that the founder's comfortable with that, because whether we're not private equity, so we don't have a fund that we're reporting to,
Mm.
but if they do, there is a horizon. The fund matures and they need to do something.
Yeah.
So, so from an investor point of view, it's about return on investment. From us, it's a similar thing. We need to think about that. We just
Yeah.
don't have the same timelines as the private
Yeah.
equity funds. The next thing is about the relationship. Can we work with this person?
Yes.
So,
Key.
making sure that they're going in it for the right reasons, you're going in it for the right reasons, and so yes, you sign a shareholders agreement and you've set out the roles and responsibilities in employment contracts and things like that, that the founder may not have had before because they
Mm.
haven't had to report, but you need to make sure that those things are present. So I think that
And I suppose that that also outlines and it deals with the expectations set on both parties in the transaction. Like, what's your role moving forward? What's your role moving forward? And let's make sure that we are completely and utterly honest with each other about expectations.
Yeah, so I think that they're the two big ones.
Mm.
Is about, are we going to make any money, and do we want to work with this person? So
Yeah.
that's what we look
And
at.
is there an exit, I suppose, at
Yeah,
some stage in the future? Because, particularly with BDC investments, I know we discussed, is the owner going to exit at the same time we come to that decision, or is there a bigger play for the owner to stay in?
yeah, and and succession is a big thing, and so
Huge.
it's a big issue in the US, in Australia. It's baby boomers, exiting business. Lots of franchisees and franchisors are, in their 60s and some even
Yep.
in their 70s. And so we see an opportunity. Now, we're not necessarily the exit strategy for the
Mm.
founders we're partnering with.
Yeah.
The people we're partnering with, we're
We're
we're in
getting
it
them ready
together.
for
Yeah,
that.
we're helping them with that. But I think you're right. If that's something that the founders need to think about, and the investors, is do we have the same timelines
Yeah.
as to what we want to do? Like, is the founder's got this is my family's legacy and I'm going to be in this for 20 years,
Yeah.
then um, then that's okay. But that means if we want to exit, they need to find another investor or they need to find someone to back them. So they need debt. So I
Yeah.
guess that's the thing we haven't kind of mentioned is founders can get debt.
Yeah.
So why would you get private equity, like
Correct.
or family offices or other people? So
And that's probably another 2 hour
yeah,
discussion in itself.
I think
Is
we're probably
like,
out of time though.
yeah, we're pretty much there, dusted
Yeah.
thereabouts. But it's I suppose, well, that's us. We're bang on time. So thank you very much for listening to BDC Partners podcast today. If you enjoyed what you heard, make sure to like and subscribe and share it around your network. Thanks again, Bruce. It was a great chatting.